Hello, good evening. It's the 5th of January 2015. I'm just going to do a US market roundup, end of day analysis from an intermarket analysis perspective. My name's Adil. Here we go. Okay, so one hell of a sell-off on the US markets today. Quite a substantial sell-off, mainly led by USD JPY, Euro JPY, which is sliding as I speak. Currently now breached the 119.5 support level on the USD JPY, and Euro JPY makes a new low at 1.423. Okay, so that obviously is a good news because the yen is obviously moving higher, which generally indicates risk off, and the Kool-Aid trade or the QE trade or the Abenomics trade obviously isn't coming into fruition, and it's certainly fading at present. Okay, so that certainly doesn't bode well. As we all know, the USD JPY has been the cog in the US market to rally, and obviously that comes to a close. It doesn't bode well at all. So the USD JPY certainly needs to motor on. Now, one of the reasons why the USD JPY has failed to continue its rally is because of the weak US data that came out on Friday, although the ISM data did come out stronger today, so that certainly put up a counter argument against that. Okay. The other reason, obviously, as we all know, risk aversion due to Greece or Brexit, and we all know the three currencies which I teach my students is obviously the yen, Swiss franc, and the Japanese yen. And they generally tend to CHF, obviously yen, and JPY and USD. So they generally tend to be the three currencies that money will go towards. Obviously, gold as well. Gold has rallied back up to above the $1,200 region, which obviously indicates a risk aversion. So risk off. So certainly doesn't bode well for the stock market at present. Having said that, the counter argument for the markets to rally is a Shanghai, which I've already explained in my FTSE 100 video. The Shanghai obviously is up a whopping 116 points, and that's not normal. Okay, so there's obviously some sort of stimulus measures there, whether it's some rumours about interest rate cut or further rate cuts, etc., etc. When China's higher, global markets will and should be higher. Okay. Now, obviously, fear has taken over because we've come back on New Year's and volume has increased, etc., etc. Call it what you want, good portfolio positioning, etc., etc. Okay, but from my perspective, I think the sell-off is certainly overdone, especially if the Shanghai is up 116 points, and I'll explain why I expect this market to bounce. Okay, so Brexit fears, global growth concerns, obviously are all there and remain in the background. Okay. Now let's have a look at what's happening from a technical perspective now that I've covered the fundamentals. Obviously, one of the other fundamentals that I haven't mentioned is oil. As we all know, oil has breached the $50 mark, which obviously has accelerated the decline. Whether that's due to certain individuals that are over leveraged in the oil market and has triggered stops and it's forced them to liquidate, etc., etc., which has forced them to sell equities, so on and so forth. Again, it's all speculation. Okay, these are all potential possible outcomes that we can delve into from a fundamental perspective all day long. And let's have a look at the technicals. Okay, let's start with the Dow. Okay, the Dow Jones obviously has pulled back into the 61% support level, so watch out for that region. We do have historical potential support around this region here, so these are two levels that we're going to watch out for: the Fib 61 and obviously a diagonal trendline resistance. If the market continues to sell off, then we all know previous resistance equals support. Then we have support around the 400, 17,400, 17,300 level. Okay, but for now, 61% fib certainly does seem to be looking to, or I expect it to hold. Okay, now Dow Transportation, that's another index that we generally tend to observe to see exactly what's happening with regards to the actual Dow Jones itself. Leader and laggard, call it what you want. Okay, we have this diagonal trendline support, so obviously we are into support there as well. Okay, so there's two reasons for the market to certainly bounce and move higher. We also have the fib. If you take our fib retracement from the pivot low to the pivot high, again we're into the 61%. Okay, so these are all reasons for the Dow to certainly potentially move higher and bounce. Okay, let's have a look at the S&P 500, see exactly what's happening there. We're into previous resistance equals support. We're into fib 61%. We have diagonal trendline support, and then we have this gap fill support here at 2013. So all reasons for the markets to bounce. Okay, now we can confirm that with the Russell 2000 and the 3000. So let's have a look at the Russell 3000 first of all. Again, we're into previous support, previous resistance equals support, fib 61 and diagonal trendline resistance. Again, all technical reasons for the market to bounce. Okay, Now let's have a look at the Russell, the Russell 2000, again into the 200 MA horizontal support. If I just draw my fib line, pivot below, pivot high, and again 61% fib. So horizontal support, solid horizontal support in this region here. Obviously fib 61% and diagonal trendline resistance all indicate a bounce on the Russell. If the Russell bounces, we all know what happens to the S&P. The S&P bounces too. Okay, that's basically what we expect to happen there. Okay, and if obviously we all know if the Russell bounces, if the Dow bounces, what do you think will happen to the FTSE? Yes, it will bounce. Hence the reason why my analysis is based on intermarket or cross-market analysis. Okay, so it's very important to look at the global markets from a bird's eye view and with two eyes and from a 3D perspective as opposed to a one-dimensional approach. Okay, so now that we know the S&P and we know the Dow is going to move, now let's try and work out the puzzle for the Nasdaq. Okay, Nasdaq is into gap fill support, is into 61% fib. Okay, I already remained long Nasdaq. I went long Nasdaq with my subscribers at 41.53, and I'm expecting 41.83 potentially higher for the Nasdaq. Okay, now that's gap fill support. So if gap fill support obviously is there, and it's a solid support region, especially given the fact that the Nasdaq does remain bullish overall. Okay, so two reasons there for a potential move higher on the Nasdaq. We do have support just below at 41.44, although we haven't touched that. Okay, so watch out with regards to that. So now we have left an unfilled gap above, so again that's going to be a magnet for price action, so keep an eye out for that. It's around the 42.30 region. Okay, so again another argument for the Nasdaq to certainly propel higher. Okay, now we cross-reference that always with the biotechs and the semicons. Now the biotechs are very interesting because we've had a failed bull flag. The biotechs actually had a positive day today, so again in carnage, whenever you see an indices that is positive, that generally bodes well for the market. Okay, and also if you look at the 60-minute chart, which I've already highlighted on Twitter, you have an inverted head and shoulders formation and unfilled gap above. So again, that's bullish. The biotechs are bullish. What do you think happens to the Nasdaq? The Nasdaq is bullish too. Okay, let's have a look at the semiconductors. Semiconductors on a chart basis here. We are coming into diagonal trendline support. So again, there's your support region there. Okay. And so diagonal trendline support, although if you do fall below, you've got 50 MA and obviously previous resistance equals support and previous horizontal support as well. Okay, that's very, very important with regards to that, observing that as well. Another reason for the semiconductors to reverse, because the HNS formation is on the verge of completion, so 95 down to 93, so you're looking at a $2 drop, so we're into the 91 region. HNS short formation is complete. Now we're looking for a short squeeze and a move higher. Okay, so if that's the case, add in the fact that you've got a inverted head and shoulders in the biotechs, and we have ourselves a nice little rally, and this market obviously were to break higher, and that obviously will send the Nasdaq higher, which, I mean, the Nasdaq's already plus 20 points in the Nasdaq from 41.53, so one more push higher here, and then obviously I should reach my target or potentially higher. Let's have a look at the Nasdaq as well. There is one formation which I've already highlighted on Twitter, and again you can see here as well. You have a downward sloping wedge formation, then you have an inverted head and shoulders formation. Okay, and can you see how this right shoulder completed here around the 41.60 region going into the close, and can you see how the futures are now currently sitting around the 41.73 level? Perfect IHS formation play out here. I mean, I entered obviously the 41.53 region, 41.52, but obviously even if anybody would have entered it thereafter when I tweeted this potential pattern, again would be in the money. Okay, so inverted head and shoulders formation states 41.72 is your neckline, 41.52 is your head, therefore you're projecting a 20-point move, so you're looking at 41.92. 41.92 coincides with the previous resistance, as we can see here. Okay, abracadabra. This isn't some rocket science. This is TA, folks. Learn it and you'll prosper. Okay, so you have a downward sloping expanding wedge formation overall. Okay, you have an unfilled gap at 42.30, which I've already highlighted, and if the biotechs obviously play out and the semicons move higher, then obviously that 42.30 gap fill level will certainly close very quickly. Okay, folks. So if that's the case, then that means that European markets are certainly looking to move higher, and I'll make a European market video very shortly explaining where they're going as well. Okay, so risk on, risk off, wax on.